Welcome, Patriot News Hour. Joe Jaquin on this Thursday. Solo. I'm going to be solo for the rest of the week. Jason, I did talk to him. He's alive. But he has got, like the real flu. Yeah, nobody wants that. But we'll see about next week. Next week's going to be a short week. We've got Thanksgiving coming Thursday. We will be closed Thursday and Friday next week. So just keep that in mind. And happy Thanksgiving. I know some of you are going to be leaving town, spend time with family. Our youngest is going to fly into town Wednesday and fly back on Sunday. But at least the government's back open, so hopefully the flights won't be so terrible. Our toll-free number, 800-951-0592. The website at allamericangold.com. And because next week is the holiday, and I didn't really think this through, we won't do any classes next week. We will announce new classes for TXIT the following week. So we'll take a week off, but probably Tuesday next week, I'll give you the opportunity to get into some of our mini classes where we teach you how to monetize the TXIT coin that you get every single day, and how to go and buy it on the exchange. Just a quick reminder, anybody that wants to, right now, if you wanted to buy 10, 20, 30,000, 50,000, $100,000 worth of TXIT coin on the exchange, you're going to drive the price way up. We'd rather, you know what, right now I'm buying, just so you know, and I've told you guys, I'll share with you what I'm doing. I've been buying all the TXIT coin I can below $4. Just remember, you know, where our path to 16, don't forget it, nothing has changed. But if you do want to purchase $10,000 or more of TXIT coin, call me. We're going to work out, TXIT will set a price. That price, it'll be above what the spot price is, but way below what would happen in the market, so to speak. So we're arranging some private sales that we think are going to be very good for the long term. As I told you, I have been buying TXIT coin, and this morning I informed them that I would be participating in the sale. So if you want to do what I'm doing, that's what I'm doing. If you want to get a part of that, just call at 800-951-0592, and we will get that taken care of for you. Remember, you have to the end of the week. I know today's Thursday, so we don't work Saturdays, to get in and still get, if you do commissions, double hash power. It's not it's a big deal, but it's not a huge deal. But just know at the end of the week that will no longer become available. All of us that are already minors, that means you guys are not affected at all. You're grandfathered. You get, if you're taking hash as commission, you still get BOGO. As long as, you know, it's obviously you have to have commission potential. At 100,000, here's what else I know. At 100,000 miners, the ability to take hash as a commission goes away. So you'll only be able to get cash or TXIT coin. And again, for those of you that are in before that, don't worry, you are grandfathered. But I just wanted to point those things out to you. And everybody buckle up and get ready. Get in. By the way, great Christmas presents. A lot of people are thinking that's a good idea. They've got, the shipping department is picking up here They think by next week they'll only be running a couple weeks behind. So kind of something you can put under the tree. Some Texit coin for your loved ones. But get it done sooner rather than later. Now, the government's back open, which means we've got some government reports. Oh, how we've missed you. A September payrolls report. I know, who cares? September was like an eternity ago, but they did print the September number. 119,000 was the number. I guess the estimate was pretty broad. This was a better number than expected. Here's what was interesting: is in the number, they did revise July down, but not a lot, like 7,000. They also revised down August, 26,000 less jobs in August. So August was 22,000. August ended up now being a negative number. And that was about 33,000 jobs total. So I guess if you took those 33,000 jobs off of this number, it would have been kind of as expected. But the unemployment rate jumped up higher than expected. And again, I don't know how valuable it is, but it's a number to talk about. I'll fill you in on the details when we get back. 800-951-0592, Patriot Radio News Hour. Joe Jaquin on this Thursday. Quick look in at the market. The Dow's higher. We haven't said that very often lately. NVIDIA, good earnings there. Kind of the leader in AI, saying, hey, people are still buying tons of servers. And I would agree with that, right? I don't know that the question is NVIDIA yet. The question is all the people buying from NVIDIA. There's 4 companies in their earnings make up like 65% of all their sales. So it's kind of, yes, it's good. It's good, but the same things, the same worries are still there. If this AI doesn't deliver, if it's overhyped, which things tend to be, then there'll be trouble down the road. But at least for right now, a little reprieve there. The Dow's up 369. It was up more than that earlier. We'll see how it finishes. We also had good news from Walmart. So Walmart is saying, yeah, we're busy, and it's food and consumer staples, and we are getting a lot of business because we're the cheapest. That was essentially what they said. So that's what's driving the market today. The S&P up 60, the NASDAQ up 250. The 10-year note, interesting. Yesterday was back at 413. Right now, 410. And it moved on, believe it or not, the jobs report. That moved the market, in particular, the unemployment rate. So the bond market kind of focused in on that particular number. Gold is flat, 4,080. Silver, I guess it's down 40 cents, but that's kind of flat for silver, right? Just under $51. I do want to highlight something for us, that the IMF was potentially thinking about selling their gold, well, some of it. Remember, the last time they did this, India bought it all, right? 200 metric tons. But let me tell you why. To give it to African countries. Yeah. See, what a great idea. Hey, we got this gold, and it's currently at $4,100, and maybe we could sell some to help these African countries. So here's the funny thing, is they're worried about the African countries' debt obligations. And I'm just like, well, what about our debt obligations? And one of the things that they said that it caught my eye, said that these countries, where they say 3.4 billion people live, so, a lot of people, spends more on servicing debt than education or health care. That's what the report said. And I'm like, oh, wait a minute. We do that, right? Right? I mean, think about it. Interest on the debt is going to be what, 1.4 trillion this year, something like that. We're already well over $1 trillion. We don't spend $1 trillion on education, not even close. Healthcare, I guess if you combine Medicare and Medicaid, if you combine them, then maybe we spend a little more on healthcare than the debt for right now. But I just thought that was interesting, because I thought, well, why would we do that, right? That doesn't make a lot of sense. But it does help keep the price of gold, at this $4,100 level, at least for a little while. Why do I have a feeling that they're going to have no problems finding a buyer? And I wouldn't be surprised. It could very well happen. And maybe the IMF views it this way. Well, they're going to default. They're going to default on the loans that we gave them. So why don't we just pay it off when they go? I don't know how that makes sense. Just let them default, right? But now you're going to wait. You're going to sell the gold to give to them so they don't have to default on your loans. That's the kind of logic that is shaping the world right now. But back to the job number. Interesting. At 119,000, that was, I guess, for the rate cutters, not the number they were hoping for. Right? They would have preferred something much worse. However, they did give a reprieve with a jump in the unemployment rate. And a matter of fact, I would say a fairly significant jump, all the way up to 4.4%. And by the way, the participation rate rose, which is, hey, more people are trying to work. Unfortunately, apparently it's not happening. Then on the other side, we did get jobless claims, and that was about what they were before the shutdown. 220,000. The only big thing there, the number of people with continuing claims shot way up. Matter of fact, it's the highest since before COVID, right below that 2 million number. So I would say this, the jobs number, head scratcher, right? Because you're like, okay, well, gosh, it's not terrible, but wait a minute, the unemployment rate's starting to tick up. The one thing of note, and why I don't know, but apparently the Bureau of Labor Statistics has said that they will not release any more jobs numbers until after the Fed meeting in the middle of December. Odd. Apparently, unless something changes, they're not going to release, because remember, this was a September number, kind of useless, but they're not going to release October or November until after the Fed meeting. So I don't know what to think about that, because I really think it's going to be the jobs market that they will use as the excuse, because they're not going to tell you it's the repo markets, to be cutting the rate. So we'll see if that changes, but as of yesterday, no more information. I don't know. Maybe they should just stay closed. And another note, more problems in Japan. The 30-year note spiking from 3% to 3.4%. One of the most extreme moves that we've seen in a while out of Japan. It is going to continue to be an issue when we think about the sovereign debt markets. There's just not enough money to go around. Even here in the U.S., the long-term yields continue to be a problem. Yesterday, we had a 20-year note auction, and it did not go well. And it just seems like this is the trend here for the United States. The 20-year auctions, the 30-year auctions, extremely poor. The bid to cover, which was normally go back to normal before COVID, like 3 to 1. It's been averaging about down to 2.7. This time around, down to 2.4. Well below what we have been seeing. The internals were just as bad. Indirects, not even taking 60% of the auction. The directs had to step in and bought the most on record. And, unfortunately for all of us, the banks got stuck with a lot of this paper, the dealers. And that is the problem, that liquidity problem that we continue to see plaguing the markets. And it doesn't matter if it's the Japanese market, the European market, the U.S. market. It is continuous. And again, it's a warning. These are warnings that, hey, we are going to continue to have funding issues at these levels. And every one of these governments has said we're going to spend more. So I'm just making a rational case. If we're struggling funding this debt now, and by the way, the amount of debt the United States is selling at 1 year or less is off the charts now. It's untalked about. But the majority now of U.S. debt is being rolled over in very, very short increments. This is a problem because it just comes up again and again and again and again and again. And when we talk about paying interest on the debt, the more debt you have to pay every year, the more interest you're going to pay, right? I mean, that's just common sense. And our inability to sell debt longer term is now meaning more and more debt has to be rolled over every year. And it's an avalanche that is coming. We won't feel it, say, next year. Right? And again, we'll feel, listen, there's already a liquidity problem, but I'm talking about there's a snowball that's coming. And we know it's coming. They don't tell you about it. But their answer is, well, it just beats the alternative, which is if we tried to sell more 5-year, 7-year, 10-year, 20-year, 30-year, it would go poorly. So instead, we'll just sell a ton of debt that's due the following year. Now, you do this in 2024. You do this in 2025. You do this in 2026, 2027, and all of a sudden, that snowball that started out really small turns into an avalanche. And this is what is coming. When you talk about, okay, we're getting ready. Listen, we're almost in 2026, you guys. This avalanche is coming down the hill. They know it. They just don't want you to know it. But that's why I'm here.
Sir.
800-951-0592. Patriot Radio News Hour. Joe Jaquin on this Thursday. And we're just talking about debt and the problems that are occurring, that they're not giving good visibility to us. The biggest issue facing us is very quietly the Treasury Department. And this started before Scott Bessent got there, and is now continued with him. And the reason being is they really don't have much choice here. They're trying to drive rates down. It's not working very well. On top of that, they are having very little success in driving customers, i.e., central banks, insurance companies, money markets, right? Some of these pension funds, to buy long-term U.S. debt. It's just a problem. And what's happening is these dealers end up having to buy more of it. And the dealers are there, right, to protect their own. So why do the dealers say, why don't the dealers just like, well, we're just here to sell the stuff for the government and they pay us a little fee to help them do it. Why should we take any of it, right? We'll just sell it. And whatever the price is, the price is. Well, the answer to that is very simple. They don't want people to know what true price discovery is, right? Look at Japan, who essentially, they've been buying the whole debt market for how long? And even now, they're having problems, right? They're running, we're running at full speed, heading off the debt cliff. But these dealers step in because they're like, oh my gosh, do you know how much money we would lose? Because remember, how do you lose money on bonds? This is something people don't quite understand. You lose money when yields go up. In other words, well, I bought this bond at 4%, and now the yield is 4.13, 4.14, 4.2, 4.25. Oh, no. we aren't looking so good, and so these dealers, they essentially have to step in. They have to step in. Because if they didn't, and we actually had true price discovery, who knows how bad that 20-year auction would have really been, right? Who knows how high the rate would have really been. And when we look at it, it wasn't huge, right? It was $16 billion. But guess what? The yield hit 470, almost 471, right? The last month when they did it, it was only 4.5. So think about it. We've cut rates from the last time this auction happened, and yet they had to pay 20 basis points more to sell it. And that was only because these dealers stepped in. How high was it going to go? Was it going to be 4.8? 4.9? 5? I don't know. So what is the answer? The answer is, let's just sell short term. Because there's plenty of people that will take, 3.7% for a year. Plenty. And this is what we've been doing. And so is everybody else. And so instead of, think about it. This 20-year, that $16 billion, we don't have to sell it again for 20 more years. But the problem is we're rolling over the majority of the $2 trillion worth of debt. We're rolling it over every year. On top of this other stuff. And so now we're ending up at a point where it's just simple math. More government spending, higher debt levels, and then the avalanche of the amount of debt that needs to be rolled over every year. I mean, we're going to be sitting here very soon at this pace where we've got to roll over $20 trillion on top of whatever the debt is, on top of whatever the interest is to roll it over. I mean, we're struggling now, and we're rolling over, 9 or 10 trillion? But we just keep stacking it. This is why I tell you, I know it's a bubble. And this bubble gets bigger every year. I mean, what's the plan? I don't know what the plan is. I mean, I guess if inflation went high enough that you could sell 20-year at, I don't know, what would we need to have good 20 and 30-year auctions? 7, 8, 9%? I don't know. Here's what I do know. 30-year auctions suck at like 5%. 20-year auctions suck at 4 3/4. Yeah. Why do you think they're pouring into gold? It makes a lot more sense, doesn't it? Now you're like, oh, wait a minute. That makes a lot of sense. Yeah, maybe I better do that. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. Joe Jaquin here on this Thursday. We did get existing home sales as well. Not much to report there either. Up a tiny bit. Home prices were also up. God, they just don't stop rising here. I want to say now 415,000. Yeah, 415,000. Up 2.1%. Essentially now home prices have risen for 4 or 5 years in a row now. Here was the thing that was disappointing. the supply actually fell a little bit. So homes are taking longer to sell. There's not any drastic move in supply. Yeah, I'll just tell you, prices aren't going anywhere. Sorry. Well, they are going somewhere. They're going to be higher. That's just what's going to be. Plan. You guys know, I'm telling you what's happening. You can make a lot of money here. Absolutely can make a bunch of money. Today's special, we're going to run $5 Liberty. So, last week we ran, $5 Indians, which those are going to be here next week. $5 Liberties. They're going to be all the way down to 1,075. That is what are we now at? 1135, so 1,075 on $5 Liberties. I've got, close to 100 of them. So take advantage of that, and think about, we talked about, I think it was with JR when he was on, the repricing of gold. Now, one of the things that raises the level of that being a possibility, well, first of all, the gold price is already helping. And again, no one's talking about $5,000 gold. They're not. They're talking about 10. It's just what they're talking about. But when you start stacking all of this debt short term, and you create this avalanche, the need to relieve that pressure, because at what point, and this is what I don't know, because quantitative easing's getting ready to start, guys. I'm just telling you, it's coming. 2026, we're going to have quantitative easing. But how much? How big can the balance sheet get before it's ridiculous? 15 trillion? 20 trillion? I don't know. And then you're like, oh my gosh, we've got to roll over $20 trillion of debt, and we just don't have it. How about we make gold 20,000, 30,000, 40,000, hell, 50,000? Why would they do such a thing? Well, at 40,000, that would put the U.S. gold reserves, if we have it, which I'll go out on a limb and say, yeah, I want to believe that we do. That's just what I want to believe. I don't know, right? Nobody knows. But that would be worth $10 trillion. And with a simple accounting maneuver, you could take half of that $20 trillion and essentially take it out of circulation. And you know what? I don't think anybody would argue about it. Is it a terrible thing? Yes. But I guess at some point, isn't that what we had the gold for? Right? We used to back our currency with gold. And now it's just paper and digits and credits, and there's nothing behind it. Nobody wants it. Would it make sense? then to pledge that gold to support the debt. Yeah. I mean, think about I think about our customers. So hey, Joe, I got to pay this. I got to do this. I got to sell my gold because I'm buying this or I'm buying that, right? Whatever it may be. And I always thought, well, that's why you had it. Well, is that something that could happen? I'm telling you right now, the way they're stacking this debt to roll over, well, it kind of looks like maybe that's their plan all along. I don't know. Patriot Radio News Hour. Final segment. We'll be back. The rally has fizzled. NVIDIA, it was good. It was, and I saw some headline how great it wasn't that great, but it was good. I mean, it beat the expectation, but it wasn't big. I don't know. That's just what I'm seeing here. It looks like the Dow's getting ready to go now. So everybody buckle up. Bitcoin has broken down. Ethereum has broken down. Bitcoin 87,000 now. Ethereum below 3,000, 2,800. And XRP, wow, XRP going below $2. Tough day here. So looked like we were going to get some relief. Does not appear to be the case right now. Gold's still hanging in. Gold's down, but it's down $15. So not a whole lot. Same thing with silver. Silver's down, but again, well over $50 on silver here. Yeah, so I don't know what happened, but it kind of moved pretty quickly. We'll see. The day's not over. NVIDIA has lost all of its gains. That's a big part. Okay, what else do we got? Yeah, Citadel now warning of more credit problems, that wider spreads in 2026. Okay, so there you have it. We got debt problems, and I don't know how long and how much legs the AI spending will have. We did have an uptick in the unemployment rate to 4.4%. I don't think we're, at least as I know it right now, we won't know any more jobs data until after the Fed meets. And the Fed meets, the middle of December. So less than 4 weeks here. We're going to, I think, have another rate cut playing out. So get your gold put away. That's all I can tell you. 800-951-0592. Get your Texit, get involved, get the income. And I'm looking at today, Texit coins outperforming Bitcoin. I mean, that's a good thing, I guess. And again, remember, if you want to buy $10,000 or more of the coin itself, call me. I'll help you do it. I just checked. If you wanted to buy, like on Buy Economy, which is where I'm having all of our listeners for, $25,000 at market would drive the price to almost $7. So if you want to buy a larger quantity of Texit, call me because we'll do it for, it would be way below that. And load up here as we get ready to hit our next price levels. And by the way, remember, just really quickly, the BOGO hash is just on the commissions. I just want buy 5, get 1 free, buy 9, get 2 free. Those are still on. Those are not going away as of yet. I wanted to throw that out there.